Hey everyone, welcome back to the channel. Today we're going to be doing a tech breakdown of a company that you've probably heard of, and it's why I went down the path of trying to break this company down. It's Okta. Now for me, at my last 3 companies that I've worked at, Okta has been the tool of choice for getting onto, all the different services. So I've used it at 3 companies. I was like, does everybody use this tool? That's why I decided to take a deeper look at it. So in this video, we're going to break down what Okta does and who it does it for. We'll then talk about some competitors and sort of how Okta approaches the market. We'll dabble in a bit of future Okta stuff. And then at the end, for those that are interested, I do like to make financial models just to sort of take the essential pieces of the KPIs or user metrics, that sort of stuff that a company tracks. In Okta's case, it's customers over $100,000, that sort of thing. I like to track those metrics, put them in a model and say, here's what this company would look like, under a bullish and a bearish scenario. So let's start out with what Okta does. Now, you can break Okta down into 2 distinct sort of categories or segments of business. Now, you could actually split the company and there'd be 2 distinct businesses if you wanted to look at it that way. The first, and the one that you are most familiar with if you've used Okta at all, is their Workforce Identity Cloud. Workforce Identity Cloud is a single sign-on solution for businesses. You work at a company. That company has Gmail and Slack and Figma and, well, a whole lot of other tools. Workday. I could go on for a long time, but you have a lot of tools, right? There's a lot of tools that you use in your daily job. Workforce Identity Cloud allows a company to take all those different tools and put them behind Okta. So when you enroll at a company or when you start your new job, you get given a set of credentials, your email address, temporary password. You log in, Okta says, hey, change your password, set up some MFA, multi-factor authentication. So that's going to be your cell phone's going to pop up with a notification. Hey, did you try and sign in? Okta will then allow you access to all of the company's applications that have been provisioned for you. And it has a lot of other cool features as well, where a company could say, hey, when somebody starts in this role of salesperson, they get access to all these pieces of software by default with these particular sort of access levels. If they've started as a UX designer, they get access to all this stuff by default with all these different permission levels. Same thing if you're a software engineer or a business analyst, they can set up default groups so that when onboarding time comes, it's just like, oh, what's their job? Software engineer. Okay, check. And then you start your job. You log on, you've got access to everything that you should have access to. That's how Okta would work in a perfect world. So I just changed the screen back there to the second company that you probably used it, honestly. It's Okta's Auth0. So Okta acquired this company called Auth0 that allows other companies to build login sort of systems to their applications. So when you are building a web application, you have to think about how are people going to authenticate against it? It's not a trivial thing, right? Especially if you want multiple ways of logging in. So you could just have a username and password. Even if you just have a username and password, you've still got to think about how am I going to store the password? How am I going to make sure that password's encrypted? What happens if a user forgets their password? What happens if they log in and fail logging in too many times? Should I have SSO as well? Maybe, you've got to the end of all these answers and you've spent weeks building out this login system. Now, what Okta's Auth0 does is, and this is part of their customer identity cloud, Auth0 does is it allows you, a software engineer or a company that decides to use this, to just set up Auth0, and then you can configure everything from within. You can turn on Google login, you can turn on Facebook login and Apple login. You can set all these different rules about how people should be able to authenticate with the app. Should they be required to use SSO? If yes, then it's already on. You don't need to worry about it. It can be handled via Okta. So this solution is really, really good for companies that are building apps that maybe don't want to handle authentication themselves. So those are the 2 distinct businesses that Okta has. They have one side of the business that's going to be catering to the enterprise. Hey, get your users onboarded easy, manage their identities easy. If you let them go or they leave, then you can just terminate everything easy. On the other side, you have, hey, make your application authentication easy. Now, there are ways that you could fail to benefit from this if you just implement it very poorly. It could, that's entirely on the end user. But Auth0 makes it a lot easier to get set up with various types of authentication. Your alternative there is, yes, you can build everything that this builds for you, but it might take a long time. Turning a little bit to the marketplace, sort of how Okta makes money, the competitors, that sort of stuff. Okta prices its services like a SaaS. So on the workforce identity side, there are various offerings where you can pay monthly amounts for each different service that you wish to add on. Obviously, it starts very low at $5 a user a month, which is, pennies almost for a large enterprise. And then it can really rack up to where you could be spending 20, 30, $40+ per user per month. That's if you have all the features, all the bells and whistles, which obviously some companies absolutely need and some companies will have in place today. Okta operates though as a sort of land and expand sales strategy, which means that their sales team is going out and they're just hoping to get you hooked on $5 a user a month. They just want to get you in there, show you how good SSO is via Okta, get you signed up, get your 200-person company on Okta, and then they'll start saying, hey, did you know that we can automatically provision profiles based on job titles and job descriptions for you? Well, there you go, there's an extra $10 a month. Did you know that when your employees leave, we can automatically terminate everything they have access to and turn all this off and recommend different provisions and all that sort of fun stuff? Well, there you go, there's another $10 extra a month. So they have the land and expand where you start off low, $5 a month, and then they hope that over time they can convince you that there's enough value in using Okta that adding this on, adding that on, adding this over there back on, makes it $20, $30 a month over time. On the customer identity front, they price it a little bit differently. They price per active login or per active user on the system, and the first 7,500 users are free, which means that, you can really get hooked. This is a real land and expand, right? If you're a startup and you are building, you've got 100 beta users and you're like, oh, just use Auth0 because we don't have 7,500 yet. We'll get everything set up. It'll be good. And then all of a sudden, things take off and you've got 100,000 users. Oh, you're going to be paying for that. And so yeah, that's like, I guess, the very definition of land and expand. They get you in the door with, here, use this, it's going to be great. And then all of a sudden you have an explosive amount of users and you got to start paying for it. There are other plans as well. Even if you had like 100 users, you might choose to pay some of their monthly fees. I think they start at $35 per month. So you might choose to spend that just because there are additional features. But again, very much land and expand. It'll be $35 a month for your first, 500 users, but then it probably jumps up quite a bit from there once you start adding users. You have more users, you pay more. Now, I know what you're thinking. All this, it has to be secure, right? And, well, yes, it does. Because if you put your entire business behind Okta, you have to believe that it is gonna stay secure. Nobody's gonna be able to get in. Nobody's gonna be able to break it. Nobody's gonna be able to access all your user accounts. Okta has had a few sort of significant breaches in the past that have caused it to have to take a step back and say, look, we are dedicating a lot of resources towards making this right. We're dedicating a lot towards security. So there was this October 2023 breach that Okta is still sort of, I guess, trying to recover from. The CEO actually came out and he was like, hey, we gotta spend all our R&D on security. We are not building any new features for the foreseeable future. We're gonna put all those on hold and we're gonna focus our entire R&D on security. And so that's sort of been like, I guess, a signal to customers, hey, we take this very seriously. We are trying to build a great product. We are trying to, get new features out the door, but we're actually gonna stop that and just focus entirely on security. And I think that that's probably the best move to make, especially because, the entire basis of this product is it has to be secure. Now, when it comes to competitors, there are a number of competitors in the space, although none are quite as, none quite as well known. Microsoft is one of them. Microsoft is well known, but the competitors in the space are not quite as well known for doing what Okta does as Okta is. So yeah, Microsoft is a competitor in this space. They have a tool called Entra. They also have Active Directory, and Active Directory competes with one of Okta's other products. Active Directory, for those that are not familiar, it's basically your employee directory. So you can assign different roles in Microsoft Active Directory and sort of assign all these different privileges, assign groups, all that stuff. And a lot of businesses rely on it. Okta integrates very well, though, with Microsoft Active Directory, which means that a lot of companies choose to use Active Directory and Okta. Okta does have a replacement for Active Directory, but it's really not as feature sort of comparable. Really is only going to be used by like startups that don't already have sort of an Active Directory base. That's one of Okta's sort of key standout features, is that they do integrate with pretty much everything. If there's a tool out there that they haven't yet integrated with, you can rest assured that they'll probably integrate with it at some point in time. And that's really one of their standout features, is integrations everywhere. Even though they have a competing product with Active Directory, they recognized, hey, we need to actually integrate very well with this, so that we can convince companies that already have a ton of historical knowledge in Active Directory that moving to Okta is still a good thing to do. Another competitor is called Ping. Ping is very much in the same market space as Okta, but a lot smaller. But yeah, there are a lot of competitors out there, and a company like Ping would benefit if Okta has a lot of sort of serious trust eroding events. Again though, Ping has to play the same game. They have to spend a lot on security and be known as a very secure company. So that's basically the race for all the companies in this space, is being known as the best in security at keeping credentials safe. If Okta does a good job at that, then it stands to win this market long term. So taking a look now at the future of Okta, last bit before we hit the computer for the valuation aspect, but the future of Okta sort of relies upon the growth of this area, Identity and Access Management, or IAM. Identity and Access Management is not going to slow down. A lot of companies out there that have to make sure that access is well controlled, identities are well controlled, and Okta sort of sits a central location for those markets. That market is expected to double in size over the next 5 or so years, which is great news for Okta, but it all goes back to can you remain known for security? If they can remain known for security, then they stand to double their market or more. Maybe they can capture some market. They stand to double though or more over the next 5 years. Now that is obviously sort of all priced into Okta stock, right? They're going to be the expected value sort of algorithms out there that have weighted how likely is it that Okta can remain secure, how likely is it they can capture this market. All that is priced into the stock. What you have to figure out as an investor, especially if you're planning on investing in a company, is where are the inflection points? And so while the IAM growth is priced in, Okta being a secure company is already priced in, the sort of weights of that. The inflection points are, the big ups or the big downs depending on severe events. So an inflection point might be a really bad security event that just sends this stock to zero. Really bad, as in Okta is down for 4 days because hackers got access to it. That would be so trust eroding that half these customers would start looking for other options. That would be awful for Okta. That's a big inflection point. An inflection point to the upside is not sort of growth of IAM, unless there's some, big sort of black swan level event that nobody could predict. Everybody just requires IAM, or everybody requires a company that does their IAM for them tomorrow. There's no real inflection point there except just continued growth. Where I see inflection points for Okta are in AI. So Okta has a lot of data. Every time I log in at work to any of these services, they know when I logged in, where I logged in from, how I did it, what authentication I used, my phone, they know a lot of stuff about how I authenticated with that system. They know a lot about how everybody, all those 19,000 customers that have hundreds of employees apiece, they know how they authenticated with systems. They know when they did it, how they did it, what they're doing, all that kind of fun stuff. There's a lot that could be gleaned from that sort of information. Now, Okta has not been deeply involved in the AI space just yet. As I said earlier, they started Okta AI as a sort of thing. As I said earlier, they've turned the focus to security. Once they turn away from security and back to maybe some of these more AI sort of influenced features, there's a lot of cool stuff they could do. They could detect anomalies in systems. Maybe there's a lot of people all of a sudden trying to log into that system over there. When there's something going on with it, they could raise red flags. Another thing they could do on behalf of companies is sort of say, hey, we noticed that all your business analysts have this group of software, but this business analyst over here has a few additional pieces that you might want to check out. So they could preemptively raise red flags to businesses, help them figure out that something might not be quite right. This could prove to be an inflection point because there might be additional revenue there. Okta has a lot of information. They haven't really dove into how much that information could sort of shape the future of security, but there's a chance that that sort of package of information could be sold to a company like CrowdStrike, or a different a Zscaler, or some other security company might be interested in that data. It's tough to gauge how much those inflection points might be worth. We've not really seen anything out of Okta that tells us the sort of path they're going with AI just yet, but those inflection points could be there that could lead to higher growth. Of course, they could lead the other way, but there are inflection points both to the upside for Okta and to the downside. If the inflection points to the upside don't happen, if AI never pans out for their business, then you still have at least this steady growth of the IAM space to rely on or fall back on. That's probably not worth falling back on because it's priced in, but that is still there as sort of a backdrop to these potential inflection points. All right, so taking a look at the model here, if you've ever watched one of my videos before, you know I like to just build a very basic bare bones model. The stuff in yellow you can change, it'll affect the valuation of the company. What I like to do is bring it all down here though, and these are really like the guiding factors of the model. So customers and customers greater than 100,000. These in blue are what's actually happened. These in black are calculated based on these yellow ones that we can change. So I have customer growth staying at around about the 8% and then dwindling off over the next 5 years. This is where the inflection points could occur, right? If you have like some sort of huge inflection point in AI and everybody needs to get on Okta because it's so awesome, maybe you have big growth in like a 2026 or a 2027. Maybe those years are just really big years for Okta because of some new features. That to me though still is like, an up in the air sort of guesstimate. But, and I say this in all my videos too, valuation in itself is just telling a story. And so the story that I'm choosing to tell is just a very basic one. We're just seeing, really, what is Okta worth if it just continues on the path it's on. No huge inflection points either up or down. It just continues on a very normal, sort of natural path. As you see, customers greater than 100k, I do have that growing. Land and expand seems to really be working. We see it has been growing recently. I think that continues over time. Now, again, you might have a huge inflection point with AI-related stuff. Maybe, they charge an extra $15 a month per user, and it kicks a lot of sort of companies up over that $100,000 threshold a lot quicker. That could change the valuation. All those numbers, as they change, they affect the revenue up top here. There is this professional services and other. This is, it's a minuscule amount. So I've got these set at 90. You see it's already at 97%. I got it at 97. I bump it up to 98 in those latter years. Minuscule amount. We have this subscription gross percentage. Actually, while we're here, the services do gross a negative amount. It costs more to actually have them than they earn. But that's good that it's such a minuscule amount then. Subscription gross percentage, though, I do have that growing. I think that the Okta is going to be able to eke more margin out of this product as time goes on. Again, thanks to that like land and expand strategy. Now, 84% would be rather high, but it's an area where I do feel Okta could easily sort of get to. That comes out to your gross profit sort of growing decently over time. Don't want to change that. Gross profits growing reasonably over time to where we're at 3.7 billion by 2029. Now, operating expenses. These are... There's a question, and I want to explore this a little bit, as to whether AI, whether generative AI, sort of future AI products, not Okta specific, but whether they might be able to decrease the costs of some of this rather substantially, like sales and marketing, for instance. There's no doubt that Okta requires a large sales team to date, but could a lot of that initial outreach, could a lot of that marketing be done by AI in the future, and instead of spending 45% of your revenue on sales and marketing in 2026, instead of spending 45%, you spend 30%? Is that doable? Maybe. Instead, I do have it sort of tapering off, but still growing. I think it could be argued that this is probably the most wrong element of the model, simply because you're getting really out of control here to still be spending like 1.7 billion or 38% of your revenue at this sort of age of the company. This could taper off a lot quicker than I have it tapering off right here. And same question for stuff like general administrative and research and development. Could these costs be cut by AI at some point in the future? Got to explore that. But for now, I just have them tapering like I normally do in these sorts of models where the company itself is growing. Obviously, these elements of the company will have to grow along with it, but they shrink as a percentage of that growth over time. Now, over here, these are just valuation sort of metrics to guide where similar firms are. So this is free cash flow as a percentage. This is free cash flow margin at Okta, VeriSign, GoDaddy. These are very similar companies in very sort of similar stages and size and stuff like that. This guides this. So this is Okta's free cash flow margin. 21.6% last fiscal year. Got it hovering around there. 25%, which seems fine because you have some, VeriSign's obviously in a league of its own, but you've got things like FleetCore, Gen Digital, UiPath is closing on that. I think it's reasonable to expect that Okta could be around about a 25% free cash flow margin when it's starting to get more mature down here. The 20 times free cash flow 25 times and 30 times. These are those same companies above, and their price to free cash flow. You see VeriSign's at a 25, so that'd be, if Okta's price the same, it'd be that middle one. Akamai is a lot higher, so it'd probably be somewhere in between these two. We'll ignore that. That's insane. Toast, obviously very high. UiPath, obviously very high. But these, say that Okta would probably be fairly valued around about this 25-ish, if not, somewhere in between the three at least. Stock-based compensation is obviously like a big sort of thing in tech companies. So I did want to try and just look at what the value would be if we put this stock-based compensation back in there. Obviously, it ends up being a lot less because the stock-based compensation, it takes them negative on free cash flow pretty much every year through 2027. So something to be aware of, right? I know a lot of these companies treat stock-based compensation as though it's not money, but it is money. This is free cash flow that's not making its way to investors. It's instead going to employees. It's just the same, essentially, as if they paid them cash, although, it looks a lot better on the company's sort of financial metrics if they do it this way. It's not good for investors regardless of which way you look at it, but obviously it's good for the employees because they're getting paid more. That said, you got to look at it. If we did sort of take, or if we put the stock-based compensation back in, and you now have free cash flow that's a lot less at 453 million versus 1.132 in these estimates here. Then do a price to earnings valuation. Obviously the earnings are really, really trampled on up here, so these don't look good. And then a price to sales based valuation. These are 3x would be, moderately high. 5 and 8 would be astronomically high for a company that would be as old as Okta at this point. But I just wanted to at least consider that Okta might have still a lot of hype around it if it is able to pretty much control authentication for the business world. All those things in there, it gets to a sort of mid valuation here of $99.92, which is right about where the company is trading today, which I think is, it's fairly valued given the sort of risk and benefit that could come. We've mentioned inflection points throughout, but if you have the inflection point down of big security concerns, then sure, it's overvalued because it's going to plummet a lot less than $100 a share. If you have like positive AI experiences, then yeah, $136 a share seems fine too. There's a lot of risk in this name, especially at its current price. So it's one that I would choose, personally. And I never want to like provide any I'm not providing recommendations. I'll just go on personally. I'm telling my own story here. Personally, this is one where I'd watch it, but I'm not interested at this point in time. It's a name where definitely interested in what they do, but it's not a name where it's like I have to buy all the stock right now because it's going to go from a $17 billion to a $100 billion company fast. Thank you so much for watching. If you did like it, please leave that thumbs up. Maybe subscribe to the channel if you're interested in these types of videos. I do have another fun one coming in a few days. Supermicro. You might have heard of it. It's been going wild, like everywhere recently, so I wanted to dive into that one. If you liked the model as well, leave a comment. Let me know if you want to see more of the model stuff. I don't mind making deeper, longer videos on the model. I just want to know if people want to see that kind of thing. But yeah, thank you for watching. Hope you enjoyed it. Have a good one, and I will see you next time.